Now, the other option too, Mark, which I've been
that's
trying to
awesome.
talk a couple of my young buyers, is to find one with a rental unit in it.
Next battle, I'ma better go, we doing better. If I ever lose, set it on, first and never. If I ever lose, set it on, we doing better. Even though it goes again. Bigger, bolder, faster.
Welcome back to the channel. Mark Turcotte here. If you want more information on the Barrie real estate market, go in the description, hit the Calendly link, and book a time with myself and we can have a chat. So, Rob, I got a question because I'm going to just jump right in here right now. You said that your business has picked up in the last month, and me and Dan can contest that we're seeing the same kind of things in our business. We're starting to see buyers come back to the market. Meanwhile, they took a whole year and a half off basically last year, but I also think why they're coming back too, and especially after the news today from the Bank of Canada is continuing with its pause going, yes, they can navigate and change things, but there was no rate change today. So that's 2 consecutive dates where the Bank of Canada says we're leaving things put for now.
Sorry to interrupt you, Mark. And they've also announced that they're going to continue with not increasing interest rates. So that should start to stimulate the market in the next while. Definitely, my business has picked up the last 30 days. A lot of pre-approvals, first-time home buyers, and people are seeing interest rates drop. So that's all positive. Gets people more excited. The weather changing gets people more thinking about getting out, looking at homes. And
yeah,
I know, Diane, you had mentioned too, you're seeing kind of an uptick as well. So I think we're all seeing it.
I have a big question. So these rules that are changing, apparently they're coming down in April and they're changing in June or something. What new rules are these? Because I hear, well, first of all, do we know for sure exactly what's changing?
We don't know exactly what's changing, and I wish I could answer that question, what rule changes are happening. They are going to be making the announcement in 2 days on the 14th, so we'll have a better idea kind of the proposed changes. I think one of the changes will be they're going to limit the banks with conventional mortgages with extending amortizations and extending ratios. So a lot of the times the banks will allow an extended ratio deal if you have 20% down. So they're going to kind of keep things at the 30-year, I think personally, but we will know in 48 hours.
Are they going to change? Like right now, a new home buyer can put 5% down.
That's right.
And if you have so that would create a CMHC, which is an insured mortgage.
Correct. So yeah, 5, 10, or 15% down is an insured mortgage. It's a 25-year amortization max. If you do 20% down, it's conventional mortgage. So then you can go with the 30-year amortization. I don't think they're not talking about doing any extensions to amortizations where we've all been hoping that they would extend the amortization for first-time home buyers with an insured mortgage. I don't think that's going to happen at this point. I wouldn't rule that happening next year, but I think right now, I think it would be counterproductive to what they're trying to do with inflation. If they start fueling the housing market too much, I think it'll have a negative effect with inflation, and they're trying to have inflation come down to, I think they said 3% by the summer and 2% by the end of the year, which I think is probably aggressive thinking, but I don't think they will make things too much easier for first-time home buyers to get in the market because it'll be counterproductive to what they're trying to accomplish.
So with a first-time home buyer, if the mortgage is insured, the rate's actually a little bit lower.
That's correct. So with a first-time home buyer, you can put 5% down, but it's not just a first-time home buyer. If you're a second-time home buyer and you're selling your home and you're walking with equity, as long as you're buying an owner-occupied home, you can buy a house with 5% down. It's not just a first-time home buyer. So that's a lot of times people think, oh, it's my second home, I can't put 5% down, I have to put 20% down. If it's your second home, you sell your existing home, you can still buy a secondary home with 5% down. You can also buy a secondary home if you own a principal residence, like a cottage, or a second home for a family member with 5% down, which a lot of people don't realize as well. But
that's especially right now where somebody might have to sell their house because they can't afford the mortgage, and they might not have 20% to put down on the next one.
Right, or they're drowning in debt and they need to sell their home, clear up all their debt, and they still have 5% left over once they've paid off everything. Then it's a little bit of a restart. So I think we're going to start seeing that a little bit as well.
As long as it's owner occupied, so you have to live in it.
You have to live in it. That's right. And there's some different options as far as first-time home buyers go. As far as a lot of times, people right now are requiring parents to co-sign on the mortgage. There are a couple lenders that will allow if a parent co-signs on the mortgage. Sometimes parents don't want to make like a 5-year commitment to their children, but there's some lenders that allow after a 12-month period, as long as you don't miss any payments, and then at that point you qualify for the mortgage. Your income's gone up, you've got a raise at work, for the parents to be removed from the mortgage on the title prior to the 4-year or 5-year mark, at the 1-year mark, and then the parents aren't making a full 5-year commitment to their kids. So that's part of the product.
Well, that's another thing where I think people think, which I was under the impression years ago, a parent or a grandparent or an aunt or an uncle could co-sign and they weren't on title. But now you're on title of the house, right?
With 99% of the lenders, they require you to go on, if you're going to go on mortgage, to go on title as well. There's still a couple that will allow a co-signer or a guarantor to go on and not come on title. But it's pretty standard that whoever signing on the mortgage document, they're going to be going on title of that property.
And then you would have to pay to get them off if you change the mortgage in a year or two.
That's correct. Yeah, it's called a release of covenant. It's usually around $350 to $450, depending on the lender. And then they just send a document to the lawyer allowing that parent to be removed from the mortgage. They sign it, and then the children continue on with that mortgage for the additional 4-year period.
Perfect.
Yeah.
There's a couple things I want to say. But with Rob made a point about, he's seeing applications come in with, say, first timers, and it's kind of a normal thing now where, a parent or a grandparent kind of, goes on title mortgage we're just discussing. And when I did an open house maybe a month ago, I saw young couples coming through with their parents or grandparents. It's hard to say. Like, they were in their mid-20s, and, they were asking me a ton of questions. So it seems to your point, to that trend that, let's face it, these kids have a hell of an uphill battle to get into a housing market right now the way it is. They put so many comments from my social media platform saying, I'm never going to own a home ever. So, and I think the parent people that are making that step or initial investment to help their kids now to get into the market, I think it is going to come the new norm. I really do. And I think, inflation numbers came decent in the US today. It's coming down in Canada. We're going to come into a slowdown economy. It's coming. This can't just keep going and going and going with how much things have risen up here. I went to Costco the other day, Kraft peanut butter kilogram, 1 kg was $8.99. Holy shit. Next week it was $10.49.
You know what I've noticed like that, where it's just like in a week, huge price. Yeah.
$2. Right. So that consumer is going to slow. There's going to come a time I really think there's going to come a time when the Bank of Canada starts slashing rates. And then we all know what's going to probably happen. Craziness.
I anticipate that happening as well, Mark. I think it'll happen towards the end of this year, potentially the beginning of next year. I don't think it's going to happen in the next couple of months, that's for sure. But yeah, I think we're headed for I wouldn't want to say a bad recession, but a bit of a recession here, which is going to cause the Bank of Canada to lower rates, and then the housing market will take off again.
You know what? I have a good question, Mark, when you were saying about the parents or grandparents. If I want to gift my child a down payment, how does that work? Does it, like, if you get a gift of money, does it have to be in your bank account for a certain amount of time, or can the parents give it directly? Because I know those rules have changed, and the gift used to be from anybody, but you can't do that anymore.
That's right. So a gift has to be from an immediate family member. They want to see those funds in your account for a minimum of 15 days prior to closing. So the parent or the grandparents can't just bring that check into the lawyer. They want to, if I was buying a home and my parents were helping me out with the down payment, they want to give me those funds at least 15 days prior to the closing of the mortgage. And then I have to show a paper trail of those funds hitting my account. If those funds are in the account within the 15-day period, then you have to get also further confirmation showing where the funds came from. So then they want to see the parents or the grandparents' bank account, the funds coming out and the funds going into your home. So to be on the safe side, you just make sure those funds are in the account at least 15 days prior to closing. And that's becoming very, very popular. A lot of grandparents, parents are gifting their children money these days because it's going to go to them anyway, inheritance, and they see the price of homes and down payment required. And they're going to get them one day down the road anyway. So they're helping them out now early. And I'm seeing a lot of that. And I've actually been seeing a lot of that for the last couple of years. Before the
I remember 10 years ago when I sold my one house and had to buy, and the deal had fallen through. I got I got private money for the down payment on my other house, and nobody asked where it came from. Nobody cared. But you remember those days? Yeah, like you could get money from anywhere. Nobody cared as long as the money was there. But now you need a trail.
Now you need to show a direct paper trail. Even if it's your own funds, you need to show a 90-day history of where those funds came from, whether it's savings, investments. Another down payment option for, while we're talking about first-time home buyers, is the flex down mortgage. And a lot of people that aren't familiar with this product, where if you have, for example, you have a $25,000 TD line of credit that's not secured against a property, it's just a line of credit you've had for many years, you can actually use that $25,000 line of credit to cover your down payment. So if you bought, say, a condo for $500,000, you could use that full $25,000 line of credit, and that can cover your 5% down payment. And then you would just have to come up with your closing costs, which would be your land transfer and your legals, which your land transfer, majority of it's covered, being a first-time home buyer. So then you just have to come up with the legal costs. And as long as you're qualified for that product, and we can factor that payment into your ratios, you can use that line of credit. And obviously then you have two payments to make your mortgage payment and your line of credit payment. But a lot of people have good jobs, solid jobs, good credit, could qualify for a mortgage. They just have trouble saving up that down payment. So quite often I'll tell them to go get themselves a line of credit, and we use that for down payment purposes.
Yeah, that's a good thing, because that comment came up many times on my platform, just going, I make great money. I make six figures, but I'm paying $3,500 out in rent every month, plus. Yeah. Can't save it up. So that's a good product for a lot of, because I think there's a lot of young people out there, and, whether they're with partners or not, or spouses or girlfriends, boyfriends, whatever. I mean, that could be a dandy product for them to get into the housing market today. And no one's talking about that.
Yeah, I'm doing one right now for two guys that work at Honda. They both make great income. Yeah. Little debt, they just have trouble saving for a down payment. So we structured it this way, got them the approval, and they're going to be homeowners come June.
Now, the other option too, Mark, which I've been trying to talk a couple of my young buyers, is to find one with a rental unit in it.
Yeah, so
now,
absolutely.
My problem with that, Rob, from what I understand, some of those rules have changed as well. How much income does it have to be a legal duplex, and how much income will they allow you to claim for that rental unit? Because I heard that changed.
So that rule changed about a year and a half ago. CMHC made a change where they'll now allow, as long as it's a legal secondary suite, so you have to confirm that's a legal apartment, you can actually use 100% of the rent of the basement suite. So if there's a lease in place for the basement, you can use 100%. If the basement rents out for $1,600 or $1,650, we can use that $1,650 towards their income. And if there's not a lease in place and it's a vacant property, we can get an appraiser to go into that property and give a fair market rent, and that income will get added to the client's income to help them qualify. So I think personally that anyone that owns legal duplexes, that market's going to increase in the next little while, because it's going to be an easier house to mortgage for first-time home buyers, and a lot of first-time home buyers will appreciate that additional rental income to help offset their mortgage payment.
Well, and the other thing is they could hold the rental property in 4 or 5 years, pull some money out, put a down payment on another house, and keep that as an investment property, right?
That's right. Yeah. You can also buy that legal duplex as a first-time home buyer with 5% down, and you don't have to necessarily keep it for 4 or 5 years. If you live in it for a year, there's no set timeline. As long as your intentions were to move into that property, you could, a year later, decide to keep that legal duplex as a rental property, use the rent from both units, and buy a secondary property as a new owner occupied with 5% down as well. So then technically you bought two properties with 5% down, and the first property becomes an investment property for the client.
Yeah, well, that's huge, right? And a lot of people don't understand those options. They don't know what's available to them.
Yeah. Now, where it gets a little bit tricky is when you get the property that has an illegal suite, and it's set up with a separate entrance and separate kitchen. It looks great. You can rent it out, but the lenders know that the city could come along and shut down that unit, so they will not allow you to use that on the A side anyway. They will not allow you to use that rental income for qualification purposes.
So it has to be legal.
It has to be legal. That's right.
But you know what? It's been hard. Like I've seen a few duplexes come up in the last couple of weeks, and they're flying off the shelf.
Yeah.
If they're vacant, they're gone in 2 days. I saw one come up on Broadmoor. Think 749, 3-bedroom up, 2 down, vacant. Sent to a client, a prospect of mine. Dragged his feet on it. 2 days later, it sells for $782, and they weren't holding off on offers.
Well, and you guys know I just sold mine, and I basically gave it away, but I sold it fully tenanted. And getting somebody to take on tenants right now is impossible, because the landlord tenant board is backed up for friggin' 8 months, and nobody wants to take on somebody else's tenants, even if they're good tenants. And you can prove they're good tenants. Nobody wants them.
If the income is there, they do.
Yeah. Well, the problem is, Mark, even if you had good income, right now with the mortgage rate, it's still, it doesn't cash flow. And Rob, another question I have: if you buy a legal duplex, that doesn't cash flow, like fully tenanted, how does that impact? Like, do you have to have the income to make up the difference, I guess?
That's correct, yeah. So it would come down to debt servicing based on your income versus the rental income. So you'd have a shortfall on that property, and it's definitely trickier. Also, having the tenant in your legal duplex, if someone was going to be buying that property to move into, yes, if they buy it for investment purposes and they want to keep both tenants, but if their plan was to move into one unit, there's no guarantee that come closing time, they're going to have a vacant unit. And if they've changed their life based around making this move, and then come closing time, you find out that tenant's not moving out, you don't have much recourse to get that tenant out. So that's where it gets a little bit trickier as well.
Yeah, that's why the vacant ones are the ones that are, they're in high demand. The ones with tenants in them, very difficult.
Yeah.
They sit there forever.
Yeah, they do. There's a few of them on the board, but vacant ones, they're saying.
Well, the thing is, you figure as a first-time home buyer, Mark, if I can get $1,800 or $1,700 for my basement, that's way over half of the mortgage payment. So I can qualify now.
The other thing, sorry, Mark, one more point there. Also, interest rates, as we all know, have been coming down in the last month. So anyone that's been pre-qualified in the last 60, 90 days and are sitting at rates locked in the fives, their qualification with the stress test, they're qualifying that mortgage at 7%, but now with interest rates down at 4.5%, the qualification rate now is 6.5%. So they actually qualify for quite a bit more mortgage money. So someone that's sitting on a pre-approval for a purchase price of $675 might now be at $750, $775 with the new rates. So definitely, anyone listening to this, it makes sense to go back to your bank or your mortgage broker and get your pre-approval updated, because you might be surprised how much it's increased in the last 30 days.
So to that point, Rob, with that, most people, the general public, doesn't realize they're tied to the bond yields. They think, oh, rates are this, Bank of Canada is keeping a pause, but they're fluctuating with the bond yields. So most people don't.
Yep,
I'm probably pretty correct saying that, correct? So yes, the bonds have been very volatile for months. And they've a couple weeks back, drop, a little bit of an up, but they can consistently coming down. They may even consistently drop more.
That's right. Yeah.
Right. So
that's the Canadian bond market's very strong, and with everything that's happened in the States, with the banks going under there, a lot of people turned and started buying the Canadian bonds because it's a safe investment, and it brought a lot more investors to buy the Canadian bond here, and then caused the bond to go down. And right now, I think it's sitting around $3, and you can kind of follow the bond market to know where the fixed rate should be, because the magic number is kind of, if you look at the bond number of $3, you can add always $150 to that rate, and that's the rate that the lenders have to lend the money out on a 5-year term to be profitable. So if the rate's sitting at 3%, that 5-year fixed rate should be 4.5%. If that bond market's sitting at 4%, they need to be around 5.5%. So you can kind of, when people say where are interest rates going, fixed rates, just follow the 5-year bond. You have a pretty good idea of where the rates are headed.
Yeah, that's good. I had a young guy bought a property a couple of years back, and he wants to get in the market and for a principal res and stuff like that. But man, he shit his pants when he saw how much his payment was, and that was 6-7 months ago. And now he's going to revisit things now. So that payment's going to look a lot lower than it did.
So that was one question I wanted to ask. If you get approval for a mortgage, how long does that average approval, how long is it good?
So the rate hold is usually 120 days. Some lenders are 90 days, but the majority of the lenders are 120 days. But if rates drop, if you're 30 days into that 120-day rate hold, you can at that point just send it on to the lender again, and they'll relock in that rate for an additional 120 days. So us as mortgage brokers, we're constantly following the rates and always making sure that we always drop the rate whenever there's a decrease in interest rates.
Well, and another thing I wanted to ask, because I try to explain to my clients, because I've seen so many deals fall apart over the years, a pre-approval is not an approval. Do you know what I mean? Like, they'll go in firm, like, especially during the bidding war, saying, well, I don't need financing because I was pre-approved for 700. But an underwriter has never looked at their file yet. Have they?
In most cases, no. There are fully underwritten pre-approval. So some lenders offer a fully underwritten pre-approval where we have to supply the documentation up front. The lenders can actually look at the deal. It's going to take 24 to 48 hours to get back to us. They're going to fully underwrite that deal, and you're going to have an underwritten pre-approval. But then it also comes down to the property, because just because you have that pre-approval in place, all of a sudden that property has asbestos or knob and tube. There's different things that can throw the lender off from wanting to finance that property. So yes, it's a pre-approval, but always recommend sending the property up front to make sure we have a quick look at it, to make sure they're good to go with their financing based on the property more than just their financial situation.
Yeah, so going firm isn't a great idea. Unless you have a huge amount down.
Going firm is never a great idea unless you have the money in hand to close that transaction without needing a mortgage. Be my answer to that.
Are you seeing deals today? Maybe not today's not a good example, but more last year when the values have dropped quite a bit. That person had a pre-approval for X amount of dollars, and then all of a sudden they submit the documents and they went firm on the deal, and the lender says, "Forget, I'm not doing this." Has that happened last year?
And I've also seen deals where they've had an approval in place and the valuations have dropped. You especially see it in the condo market right now, because I feel like the condo market's taken a hit even more than the single family and townhouse market. Diane, a couple deals I've had lately, we discussed.
Yeah.
Appraisals are coming in a little bit short on the condos. Even people that have bought a condo a year or two ago that they thought they were getting a really good deal on it, and now some people are selling out of desperation, and the appraisers are not putting the valuation on it, and they're in the position where they have to put down a little bit of extra money to close the transaction. Luckily, everything's closed, but that's something I'm definitely seeing right now.
What condo buildings? I'd be curious, because if we talk about Nautica, holy cow,
they're being stupid in there right now.
We're talking $100.
I know,
but they're getting the money though.
Yeah. Well, that's the nicest, probably one of the nicest, or one of the nicest buildings in Barrie at the waterfront. That's its own beast, I think. Yeah, the Nautica is a very nice building. There's some other ones that are close to the highway and different areas around town that aren't selling as quick as people.
Like they're trying to close on a new build that are having a hard time closing because the resales are cheaper than what she paid the builder. Do you see what I mean? Yeah.
Is that what's
happening? That's happened to a couple people that I know of, yeah.
Wow. That would kind of suck for that buyer, because that buyer would have been in back in 2020, 21 maybe, who went pre-construction on that?
Yeah, anytime you buy pre-construction, you're taking a little bit of a gamble, and most times it does work out, except when you run into a little time like we're in now. And I think, even a lot of people that bought last year, right? A lot of people bought homes and put 5% down and paid a 4% insurance premium. So technically at closing, they have 1% equity in that property. Doesn't take much of a shift in order to be underwater with your mortgage. So I have a lot of clients on the books that are in that situation, unfortunately.
So how scary are the lenders today then, based on last year's sales and giving out money pretty quickly based on high valuations?
A lot of those mortgages that are kind of the high risk people bought last year with 5, 10, or 15% down are insured mortgages where the clients paid the insurance premium. So the lender is back end insured, so they can't really take a loss on it. So are they nervous? Probably not. I would say CMHC and the government's a little bit more nervous because they're the ones that can take a loss on that property.
Well, and you know what I've heard in the last couple months? Appraisals are all coming in really low because the appraisers are erring on the side of low. Like they're going really low, sometimes too low, because they don't know what the market's doing. Have you seen that, Rob?
I have definitely seen that, yeah. and they're not, the appraisers, if you're a successful appraiser, you have a pretty good business going, and you don't want to put your name on the line if all of a sudden there's a downturn and there's a couple of houses that get sold at a loss. That comes back on the appraiser. So especially on refinances, they're being super conservative, and they're following the market closely like we are, and they don't want to take any chances.
Well, and don't you find, like right now, you see one sell at a really high price, and in the same neighborhood, almost one sell really low. So, like, the appraiser is going to take the low one, right? Always.
Yeah, well, they have to put 3 comparables into the appraisal report, but yeah, definitely if it's a direct comparable on the same street, same house, that property is going to have the most weight on that appraisal. And then if someone's selling out of desperation, or someone's ran up their debt, or someone's in a variable rate mortgage and they're having trouble making their mortgage payment, and they say, you know what, we bought this house, we need to sell this house, and let's just get out of here quick, and they sell that a little bit of a loss or lower than the market value, then that can definitely affect the person that goes to finance something on that street or in that area. 30, 60.
I've seen it happening, and I've seen some get sold really low, and the buyer, I know somebody that knew the seller, and the seller said, well, I got a real good deal on another house I really wanted, so I just gave it away. I knew I was giving it away, but I didn't want to lose out on the other house, so I don't care. I just gave it away. And those things affect all of us, Mark. It affects, Rob's business. It affects our business, because now you go into the neighbor who says, well, I want 800, and you got to tell him, well, the dude next door just got 650. How am I getting you 800?
Yeah, but that 650 is not available anymore. So, I don't know. I mean, I think we've seen them all year long, but I don't think it's going to have that much effect. I've seen a couple on my street, 697, 699, 714, 712, 765. Like, they're kind of all over the map, but they all sold pretty good. So I don't know. I mean, I think those properties are gone, and we're not seeing a replenishment of the amount of inventory coming out of the available inventory. We're not seeing it replenished as fast as it's going out. We're not. I'm looking at the board 3 or 4 times a day and going, holy shit, there's just no product. And I got people looking for certain stuff.
Well, Rob probably has the same thing. How many people do you have pre-approved that can't find a place?
Lots and lots of people are complaining about the inventory, and I've been telling people for the last 30 days, 45 days, be patient. As soon as March break rolls around, the weather changes, people will fix their houses up, clean them up, and there'll be a lot more things hitting the market. And
they're not.
I was wrong. And I'll admit it. But I don't know. Usually this is the time when you start seeing a lot of stuff hit the market.
So there was 3 of us agents all having a huge debate at the office yesterday, and nobody agreed. One said there's going to be a big influx of inventory. Oh, it's the springtime. I'm like, well, buddy, it is springtime.
Springtime happened 6 weeks ago, in a sense, really, for that spring market, right? February, mid-February, buyers are coming back.
Well, my question to him was, listen, if I can't get approved for the mortgage I already have, if my mortgage is up for renewal, I'm going to just let it auto-renew. So a lot of people don't understand that if you don't go, and Rob can verify this, if your mortgage is up for renewal this year, if you let it just keep going, you don't have to qualify again. Is that right?
That's correct, yeah. You'll get a renewal. As long as you haven't missed any payments, you'll get a renewal from your lender. There's no requalification at the time of renewal. One thing some people don't understand is if you do sell your house and you're going to port your mortgage to a new property, you think, okay, I already have a mortgage for $400,000. I'll just take that $400,000 to this next property. You still have to requalify to port your mortgage to a new home. So just because you have a mortgage doesn't mean you're guaranteed that mortgage from your institution.
Oh, so I didn't realize if you're porting, you have to requalify that.
When you're porting your mortgage, they want to see new documentation again in order to approve that port.
Wow.
And usually that
it's
for more money.
No, that port would just be dollar to dollar. If you're taking $400,000 from 1 month from Scotiabank, just throwing out a bank, $400,000 from Scotiabank, you're selling your home, you're taking that $400,000 going to a new home. When you submit that deal to port that mortgage, they're going to ask you for your income documentation. So if your income's dropped and you've lost your job, doesn't mean you're guaranteed getting that mortgage on the property. So you have to get a pre-approval before a port.
Well, you know what I learned, Mark, because over the years, and I didn't know this either, when you change even $1 on a mortgage, a bank is writing you a new mortgage. So you have to reapply for the whole thing. When you port, you got to take exactly what you have. You can't change it. So as soon as you add $50, it's a new mortgage because they got to rewrite it all. Is that right, Rob?
That's right. And if your mortgage is up for renewal, if you're taking a 25-year AM and you're 5 years in and your mortgage has 20 years remaining and your mortgage is up for renewal, you think, okay, you know what? My mortgage payment's gone crazy. I'll just put my amortization back to 30 years to lower my payment. You have to stick with your original amortization. So when your mortgage comes up for renewal, which now we're seeing people that were in 2.5% fixed rate mortgages and they're getting their renewals at 5%, their payments jumping. They don't have the option to go to a 30-year amortization at renewal without rewriting that mortgage. So when the mortgage comes up for renewal, you have to stick to your initial amortization, where a lot of people just think, you know what, when the mortgage comes up for renewal, we'll just reset it for 30 years because we're not paying this mortgage off anyway. They don't have that option without redoing the mortgage and requalifying for it. And now it's after, because a lot of people got that mortgage 5 years ago before the stress test came into effect. So a lot of people won't even qualify for the mortgage that they have currently on their home. So that's making it a little bit tricky too.
Because I said, if I can't get approved for the mortgage I have now, what am I doing? I'm not selling.
They're not selling.
I'm staying where I am. And one of the guys at our office, Harley, that Mark knows, he said in his neighborhood, one lady is a nurse and they're in that position. She's just getting more hours at work. Another guy just got an extra part-time job to pay the mortgage because they had to renew and it's higher. So people are just working it out somehow. They're letting it auto renew and they're trying to find the money, or they're taking it from their line of credit to pay their credit card, to put money over into the mortgage account to pay the mortgage. Like, everybody's just shuffling money around because I can't sell if I can't buy another house. What am I going to do?
And I think that's, like Mark said, I think that's why the inventory is one of the reasons why the inventory is low, and I think that's going to cause, we're already starting to see it if you price it correctly, sometimes some bidding wars, and I think then the values are going to start creeping back up again. So my personal feeling.
Are you seeing another thing that I'm wondering, because I was seeing the last couple of weeks, a huge amount of high price listings, 1.3s, 1.4s, 1.6s, 2.3s, and they're selling. And I'm thinking, is it just because these people, that doesn't affect them? They have money. The people that are doing that already have a bunch of money. Is that what it is?
Yeah, well, anyone buying $1 million home, if you're going to buy anything over $1 million, even if it's $1.1 million versus $999, you have to put 20% down as soon as you get over that $1 million mark. So the house that's over $1 million requires 20% no matter what. So if you're going to buy a house for 1.3, you're going into that with a minimum of $260,000 down. So that's obviously a tougher mortgage to qualify for unless you have pretty good income. But yeah, there's people out there sell their homes and have large down payments and can buy that. But yeah, you didn't see many $1 million listings 3, 4, 6 months ago. It was rare to see one, really. Now they're starting to pop up.
Oh yeah, I think, Mark, in December, what is that stat you did on $1 million homes?
So 5% in the fourth quarter, 5% of the inventory sold in the fourth quarter, $1 million and over. Again, $1 million to say $1.3 million. We'd see the odd one for $1.6 million or $2 million, but it was rare. So, and then last quarter we saw 15% of inventory selling over $1 million. So that's a big jump, and maybe because rates have come down with the bond yields, maybe some buyers going, hey, now it's time to come back. Maybe.
Or is it because the interest rate doesn't touch those people? Like, the interest rate isn't touching the person that is selling in Toronto for 1.8. They're coming here and paying 1.3.
For sure. Then that's an easy fix. I still think Barrie people aren't buying Barrie properties, and it's been that way for a long time. We've had many discussions on it. I don't see it. It's still driven by a North York buyer, and I think that will greatly continue as we progress through this year and into the future. And immigration, look at the immigration numbers in 2022. There's 1 million people came into this country. 600,000 of them were employed or students. So why are rentals so high? Well, that's one reason, right? But 400,000 people, they're potential home buyers. And 50% of them are saying GTA markets.
Well, you know what? This is what I want to ask Rob. So, Rob, a lot of your client base is Barrie people, right?
Yeah.
Are they buying in Barrie and around Barrie, or are they going north?
A lot of them are buying in Barrie. Some are going north. I've seen the trend the last 12 months would be to sell the home here and move to out east. A lot of people moving to like Nova Scotia. I can buy this property out there for $250 and be mortgage free. I've had a lot of clients do that.
And west too.
Yep.
Look at your dollars out west. $500K gets you a castle in Calgary. $300,000 condo is like pimped out in Calgary. I'm telling you. I follow a couple guys on TikTok and I go, what? $300,000? Look at Trish went out there. Look at the other girl who's on Stu Cullen's team went out there. I've messaged him. How do you like it? Great. We're never coming back.
Yeah. Oh, what's Teresa? Teresa. Right? It was
and
Teresa.
They're both practicing real estate. Teresa. Right. They're not coming back. They're both back in the business, selling out there.
You know what the problem is, and it's probably the same problem with me, where with a lot of people, if you have family and grandchildren and, you know, everybody right here, how do you move away and see them once or twice a year?
Well, let's face it, a lot of grandparents out there that don't see their grandkids, even they live in town, for Christ's sake.
I guess you're right. I guess it depends what's important to you. Yeah. Right. I could see if the grandkids are young, you know, a baby to, I don't know, let's just say 10. After those kids get to be 11 and 12, those kids aren't spending time with grandma and grandpa. They're not even spending time with their parents. Yeah, you're right. I know.
Really? I have a daughter, like 16. You got to, where she don't spend time with me. Hi, I'm Uber Mark, driving to practice, driving here, driving there. That's it. So, you know, I think people are making decisions, you know, hey, we don't see them very much. They don't want nothing to do with us, which is a normal thing. It's a normal way of life. Let's do the move. And I know a lot of people went out east too, right? 3 people in Avery's class in grade 8, families moved out east. And number one reason why? We can sell our home here, be mortgage free. Well, goodbye. See you later.
Not last year, the year before, I had 3 clients move to New Brunswick. And I mean, that's a sad thing for us in the industry we're in. Even the good thing, Rob, with the business you're in, you can approve them for a mortgage anywhere in Canada, correct?
That's right. Yep.
Where we are screwed because our license is only good in Ontario. So when our clients are gone,
we need well, that's when we get a referral network, right? If we have that relationship with them, moving out east, if they haven't met someone in the realtor, hey, I got a realtor for you.
Yeah.
Take 30 points.
And Rob, when you are doing lending out of province, is it harder for you or is it basically the same thing?
So your principal broker has to be licensed to do mortgages in that province, and every province has their own guidelines. For example, like Quebec, you need to, when someone buys a property, before they waive their financing, you have to have a firm commitment from the lender, and you have to have all conditions complete, like satisfied. So you completed the down payment, you completed the appraisal, you completed all the income documentation. Where in Ontario, we have to get an approval, and then they put the conditions in the approval. So then we have to meet those conditions prior to the closing of the home. So there's a few differences between mainly Ontario and Quebec, but then the majority of the other provinces are kind of in par with Ontario.
And so you don't need. Well, I know my nephew years ago moved to BC, and like when they do power of sales, you have to go in a courtroom, Mark. Like it's a courtroom, and everybody that wants to buy the house sits in this courtroom with the real estate agent, and they're all like yelling, I don't know, submitting stuff. Like it's a whole different process there.
Wow.
Well, it's a power of sale. A power of sale, like you go to the courtroom when they're doing the power of sale, and everybody sits in there. And I never heard of it before, but they've done 2 of them, like they purchased like that. And I just wondered from a lender standpoint, like the deals don't even, like they're not even using the same documents that we use. I don't know about Calgary and New Brunswick.
Wow. You know, I'm not even seeing a lot of power sales come up, and everyone's, you know, thinking, again, I know there's a lot of people hurting out there with, you know, who bought in that peak market and, you know, renewals came up, whatever, valuations are down so much and, you know, they're killing themselves. But, you know, are we seeing them, Rob, are you seeing some of those people losing their homes or can't afford it or going to you for advice going, hey, you got to help me because my payment's $5,000 a month now. And when I got it, it was like $2,500.
I wouldn't say I'm seeing a lot. I'm definitely seeing it. I'm seeing people call stressed out about their payment if they're in a variable mortgage or if their mortgage is coming up for renewal.
Yeah.
I think there's a percentage of the population that's kind of really hurting right now, but I think there's also a big percentage of the population that took advantage of COVID and took advantage of the times where they were getting free money from the government. They didn't have to make their mortgage payment. They didn't have to make their car payment. They got free money basically. So I think there's a lot of people sitting on some pretty substantial savings from the over the last couple of years, and I think people are still spending money. Obviously, if you look at the CPI, the inflation numbers, people are still going on trips. People are still spending money. It's starting to turn now, but I think there's still a lot of people that are in a pretty good cash position based on COVID.
Yeah, well, everybody's thought that we were going to see all these power of sales, but then Mark and I, one of our podcasts, it showed that like the mortgage default rate was 1.7% or something.
It wasn't even percent. It was 0.14%. Like, it was so small. It was 99%, more than 90, almost 99.86% or whatever that people are mortgages. Were,
and what do you get those numbers too, like, Rob? Huge. Like, do you guys see what's going on with the defaults and if people are struggling?
None from time to time, not really, to be honest with you. I think you might see some more power sales because I know anyone that was in a bit of a jam in the last 12 months or the last year and a half that took a second mortgage to 80% or 85%, and now that second mortgage is coming up for renewal. One, they don't have the ability to. Normally, we'd say get a second mortgage, and then when the mortgage comes up for renewal, we'll consolidate your first and second mortgage. But because you can only refinance to 80%, a lot of those people don't have the ability to refinance, and a lot of times those second mortgage holders that lent them up to 85% look at that property and say, you know what, they're mortgaged up to 580 and that house is now worth 650 or 620. It's a little bit high risk. We're not going to renew the second mortgage. They either have to come up with the cash to pay out that second mortgage or sell the home. So I think you're going to see some people that have multiple mortgages on their property be in a position where they have to sell in the near future.
And that was one thing that yesterday when we were all debating this at the office, one agent said there's a high percentage of people with a 1-year mortgage. And I didn't agree with that. Am I wrong?
There's people that I put in 1-year mortgages last year that thought that we're going to hit a bad recession here and they're just going to go for a 1-year mortgage because in a year's time, rates can be back down to 2-3%. So obviously we advise what we think is going to happen. And the end of the day, we put in whatever product they want to go with. But I have 1-year mortgage coming up for renewal that people are not liking the renewal rates and they thought the rates would be down by now. I think probably a pretty safe play at this point would be a 2 or 3-year fixed mortgage personally, but I don't have a crystal ball. My guess is yours.
Well, and I don't think, like, I have a lot of my clients, and I don't know about Mark, I have a lot of people still locked in at the low rate.
I have some, yeah, but no one's selling. Like, I don't have a lot of people. I got one coming up, a condo, but
no, I know
not too much. A couple buyers hanging around.
I got buyers, and I can't deal because, like, everybody still wants it for way lower, right? They're still looking to say, well, it's going to keep going down, and they don't want to pay.
Well, now that there's starting to be a little bit of a turn, I have a client that people were saying, oh, I don't want to sell because we're now like the low, we dropped 20%. But now you're starting to see people say, oh, I don't want to sell because I think the market's now starting to bounce back and my house might be worth 40 or 50,000 more come summer months. So now we're starting to hear that. So it's like, sure, the script has flipped and now they don't want to sell because why would you sell your house at 825 when you might sell it for 875 in 4 or 5 months' time?
I think we've all recognized we're in a downswing, right? Yep. So now we're in a downswing. When is it going to start going back up? And if it's going to start going back up soon, what the hell? I'm not selling. I'm not going to do anything now.
Well, I think it has. I think you're going to get they're going to release the numbers on the 14th, the inflation numbers. And one thing that's been helping inflation has been housing because the housing market's obviously taken a big hit. And then now, I think we're going to start to see that that's starting to bounce back. People will realize that the housing market's coming back.
Well, that's where I had 2 buyers I've been showing last week because they're all frantic. Diane, I think, is the housing market coming back up? Is it going to go back up? Because if it is, I need to do something right now because I can't get approved, right? They can't get approved if it starts going back up again. So now they're frantic. Like, I think we better do something now. So you are seeing certain buyers realizing that, hey, this could be an upswing, and you're seeing the sellers the same thing. Why am I going to sell when we're at the lowest? Why don't I wait?
That's right. And I think that's part of the problem right now.
Everyone's on hold doing nothing. That's what's happening.
So, Rob,
thanks for having me on the call.
Bye. It was awesome.
Oh, no problem. Thanks for being here.
Yeah, it was good. I think some people.
Okay, sounds good.
Okay, talk soon.
Okay, talk soon.
Bye.
See you guys.